Hello, we are going to talk about the fifth European Union Anti-Money Laundering Directive. Money laundering is the process that converts illegally procured money to legal tender.
There are three steps for money laundering: placement, where funds are placed into the financial system through cash-based enterprises like casinos or gambling; layering, camouflaging the source of the money by moving funds from one country to another; and integration, this involves returning the proceeds back to the original source.
The war on drugs ended with the US criminalizing money that was sourced by selling drugs. This led to the creation of the Financial Action Task Force, which created the first AML regulations, which formed the basis of the first European Union AML Directive in 1990.
The scope of the first anti-money laundering directive was limited to financial institutions, which were asked to maintain identity documents for 5 years. They were also required to perform due diligence before opening accounts and for large transactions. And finally, they were expected to report any suspicious activities.
The second directive enhanced the scope to include investment firms, money exchangers, and money sourced by corruption. Furthermore, the regulators were also authorized to identify, trace, seize, or confiscate any property and proceeds linked to money laundering activities. It also established a reporting framework.
The third directive included counterterrorism financing for the first time and also included the services of non-financial businesses and professionals where the cost of these services was over €15,000. It also introduced the screening of politically exposed persons.
The fourth directive introduced a risk-based approach. Due diligence requirements were enhanced to include ongoing monitoring of high-risk customers. Domestic PEPs were added to the screening process. The definition of senior management was expanded to include any employees with exposure to AML processes. It also removed the whitelist.
The Department of Justice and Equality brought into legislation AMLD5 via the Criminal Justice, Money Laundering and Terrorism Financing Amendment Act in November 2018 in Ireland. However, since this was a delayed implementation, Ireland faces fines of up to €1.7 million.
On the 19th of April 2018, AMLD5 was passed by the European Parliament. The Member States need to be compliant by January 10, 2020. The directive is an extension addressing the components that were lacking in AMLD4. A greater emphasis is placed on financial inclusion by including virtual currencies and exchanges in the scope of AMLD5.
Any online transactions in excess of €50 and prepaid cards whose value exceeds €150 need to be screened. This is to remove anonymity. Unlike the past, terrorists are now using small value transactions to raise money to carry out activities. The EU will maintain a consolidated list of PEPs, unlike before where it was maintained by domestic states. Thanks for watching the video. While working on AML compliance, remember, money laundering is not a victimless crime. Someone has suffered for the money to have been procured.